Welcome back. This is day 7, I think, of the Road to Profitability series. In this video, we're going to be talking about internal range and external range liquidity and their relationship with each other. So, right off the bat, let's go to this more simple drawing to get the basics down. External range liquidity, so let's write this down, is basically just highs and lows in the marketplace, right? Like the top of the range, like we went over in last video, like the highs and lows of ranges. Liquidity. Sorry, can't multitask. This could also be external range liquidity in the form of previous day's highs or lows, previous week's highs or lows, previous sessions highs or lows. Really anything that's like the highs and lows of the range you're working with, right? External range liquidity. It's in the name, range liquidity. Highs / lows. Then we have internal range liquidity. So liquidity that's resting inside of the range, which is, as you can see here, fair value gaps, right? You think internal range, think fair value gaps. Think external range, think highs and lows, right? These are the two things that the market operates under, is internal range inefficiencies and external range liquidity pools. Fair value gaps. So you can see price will be expanding. We retrace into a fair value gap. Remember the little board I showed you, retracements equal fair value gaps. Then we come up, take this external range liquidity. So your trade idea could be something like this. This could be like the 1 hour chart, and you trade something like that, right? Most ICT traders, if not all, you're going to be entering off internal range liquidity, so retracements, and you're going to be exiting on external range liquidity, so liquidity pools, places where price could reverse. So most of your trades are going to look like something like this, like a higher time frame retracement, when we're expecting an expansion higher to or through this. All right, same thing here. And then if we come back over here to this drawing, a little more advanced, you can see this is what we're drawing. We're in a bearish trend, so we have this external range. We take out, let's just say we take out a high time frame key level here, and we reverse key level. We reverse in here. Then we come down here, make a fair value gap, retrace. We target this external range, come through it, retrace into this fair value gap, etc., etc. Right? Then once you hit a key level, this is going to be the sell side of the curve, and once you hit this key level, so in this case scenario, it's going to be previous week's low. It's a higher time frame external range liquidity. We expand out of it, leaving a fair value gap. We can expect to retrace, and we can expect this retracement to come back up to this external. So, you know, let's say this is over the course of like 2 or 3 days. You're going to be wanting to try and frame your setups like this, right? And most of the time, New York provides this retracement down into some type of internal range liquidity, right? So we're going from internal to external. It's that simple. And this is kind of, let's just say this is like the 15-minute time frame or the hourly, and then you have, you know, because time is fractal, you have this external range liquidity on like the 4 hour or the daily resting up here that we hit too, right? Over here, you're only looking for shorts, right? Very simple, very simple. All right, so that's the basics, that's the gist. There's not much more to explain about this. I can just show you some chart examples to help you understand it better, but this is really just it. Internal ranges for value gaps, external range, liquidity pools, entering on retracements into internal range, exiting on expansions towards external range, right? Again, time is fractal. You want to be framing your higher time frame setups like this. So this is the last week-ish or so in price. We have this range here, this low to this high, premium discount, right? Holy shit, why is that so big? Due to. Alright, and then we come here, we take out one side of the range. Everything in here is internal range liquidity, external range on the extremes of the range, right? So I take out the internal range, create a fair value gap, come back down into it, take out this external range. Why is this external range? Because this in here, again, this high to this low is a range because you take out some sort of sell stops right here. So this could be considered a like range inside of a range. So this is your high of the range and the low. So this is now your external and internal after we take out this. You see here, we come back to internal, hit the external, we come down, and you notice how in this case we didn't bounce. You would expect to, if we're continuing, to come down to this fair value gap and use this as support to go higher for this external or this external, yet we didn't. So when we displaced through this and closed below this, you can now expect that this was a reversal. So when we come back up, and in this case we didn't come back up into this, and it's for something I don't want to get into yet. It's kind of advanced, but basically you just have to know that this is a breakaway gap, and like 9 times out of 10 we'll come hit this gap, but in this case we did not. Just don't worry about it. So anyway, typically you'll see this candle will probably like retrace into this, and we go lower into this external range, so we take out this low. After here we reverse again, create fair value gaps, internal range, we retrace back into it, we come up here, take out this external range liquidity, we displace through it, we go for this external, this is a higher time frame external range liquidity, right? We displace through it again, we come down, use this internal range as support right here, and then we take out this external, right? Still haven't reversed yet, we're very bullish recently, come back, internal, yada yada yada. And then if we go over to a higher time frame on the daily, you'll see this is our all-time highs right here on the NASDAQ. So this was made December, we have all-time highs December of 2024, right? This is our external range liquidity, and you'll notice this is the exact same as the model I showed you, how we have the sell side of the curve, and then we're expecting, you know, it works in this function, we come down reverse, works in this function, right? So on the daily we had this sell side of the curve where we're coming down for value gap here, we respect it, here you are, and the daily's kind of messy right now, but you know, we have a volume imbalance here, we don't respect it, so maybe it's not the best example, but you get the idea. We're respecting in general these fair value gaps to push price lower, hunting this external liquidity, right? You'll see we retrace out these externals, go back to internal, come down here, smart money reversal. We have, once again, this is really fucking messy, there's a lot of gaps, this is the whole Trump tariff, but you can see volume imbalance plus fair value gap, you can just combine them into one, respecting internal range liquidity, right? Volume imbalances slash fair value gaps, respecting, and we have this external, we're targeting all these externals, right? So we're in the buy side of the curve. Our next clear target is these all-time highs, this external range liquidity, and we want to be taking fair value gaps. My whole bias since around like beginning of April has been, after I noticed this market structure shift and we reversed, has been enter off fair value gaps. This might be clear on the 4 hour, but enter off fair value gaps, targeting these highs. So enter down here in this fair value gap, target this high, right? Enter in this volume imbalance, target this high, right? Enter in this fair value gap, target this high, because we're on the buy side of the curve, and that's very important. In the sell side, during the Trump tariff market, you want to be selling in like this fair value gap, targeting this recent low made, right? On the lower time frames, selling in this fair value gap, targeting this low, right? Selling in this fair value gap, in this case probably would have got stopped, but you know, selling in fair value gaps, targeting recent lows. Our next draw on liquidity is these all-time highs. So we'd expect something, this is what we could expect, right? This isn't financial advice, but something like into this one hasn't been tapped yet, this internal range liquidity, go up all-time highs. That's just like a rough example of what could happen, but not trying to bring out the video too long, very simple concept, shouldn't be hard to grasp. You know what, let me show you trades I took using this. Let me show you like one trade I took. I'll try to find a good example using external and internal, right? Because I think it'll give you a better understanding. So we've already marked this out as a range. This is the external range liquidity. We're coming up. You'll notice we trade from like 9:30 to like 11:15, roughly 10:50 to 11:15. Right here, you'll notice 9:30 comes up, takes this internal range liquidity, so the time and price align, which is going to be the next segment. We come over here. You'll notice, let's actually go down to the 5 minute. because I trade the 1 minute, but the 5 minute should be fine. You know what? Let's go to the 1 minute. I'll show you the exact trades. Right? We take out this external range on like the hourly, 4 hour. We go down to the 1 minute, and we look for 1 minute external range liquidity. So our targets are going to be external range liquidity, right? It's going to be lows. This would be external range, right? Prominent lows, right? This is the external range of this range right here. External range, of this range right here. You could use this as your external range. You could use any of these lows. You could use this low, right? So this is my draw on liquidity for the day. It was about, where's London? Yeah, so I was targeting London's lows for this day. So this is our higher time frame external range liquidity draw. Let's get rid of this one. So what this is our higher time frame draw. We're coming from this high time frame external range liquidity. Let's make this super simple. Let's get rid of these. External range liquidity here, external range liquidity here. After this gets taken out, and we can confirm a reversal with, we have market structure shifts, right? We have, what would be the first? This would be the first market structure shift. Right? So after this, we're looking for reversals here. So for value gaps, we're looking to enter on one of these internal range liquidities, right? We don't get filled, don't get filled, don't get filled, right? This one we get filled, right? Again, time and price align. There's certain times of day you should be trading, and that's when you're looking for price to do this, and it did. So we enter off internal range liquidity with a safe stop, let's just say like here, right? And we're going to be looking to take partials at these external ranges. But let's just say best case scenario, we're entering off the higher time frame. Let's zoom out a little more. We entered off this 1 minute. Let's stay on the 5 minute. So 5 minute, the first 5 minute fair value gap to be touched. I'm sorry, wait. I think it's just clear on the 5 minute. So we're using 4 hour external range liquidity to frame our trade, and 5 minute internal range liquidity to take our entries. So we have a market structure shift, right? We have, after the market structure shift is made, we pull back into this fair value gap. So you want the market structure shift, then a pull back into a fair value gap. You enter off this fair value gap, right? Stop like right above the high, a safe stop, and you're targeting the next higher time frame external range liquidity. Boom, right there, and it's that simple. You'll notice we reverse off of it, come over, soup it again, external range liquidity for value gaps, and that's, this is this whole nother separate lesson, but you get the gist, right? External range, enter on the internal range, exit on external range. This is framing our setup, this is our entry, this is our drawn liquidity, right? You just made 8 times your money, whatever you invested. So, yeah, that's kind of it. Next video is going to be about time. This will relate to this exact trade, and I'll catch you in the next video. See ya.